All right, lads. So obviously a little bit later than I promised, but anyway, I'll get it done. This is the 2018 club account, the uh, the DEB one that I asked you to do maybe for a bit of practice. So usual process. We're going to do our tells us to do our statement of accumulated fund first, then our income and expenditure account, and then our balance sheet. So first one. We've got clubhouse and course. So we're obviously taking everything from the top here. There's no depreciation. So clubhouse is an asset. That's 750. Then we've got equipment 23 asset. So shouldn't be anything too difficult at the top here. Bar stock is an asset. 6,000. Bar debtors of 455. That's an asset. Creditors is a liability. That's 4 5. Life membership written off. Life membership is a liability. 50,000. The levy reserve fund is a liability. And that's 60,000. Wages due is a liability, and we can assume that'll tie back in with sundry expenses again, unless we're told differently. Subs prepaid is a liability. That's 1,300, and then investment interest due of 200 as an asset. Now I broke my rule that I told you to do, which was read through the question and see if there's anything in it interesting. So there's a couple of things. Investment interest due. I also told you as soon as you see investment interest due, write in investments, and we'll come back and work those out. So just see if there's anything in. There's a couple of things I could see straight away. So there's a sale of equipment. So there's going to be a change in equipment. There's also probably going to be a profit on the sale of that equipment. Anything else? The bank balance. Well, we'll see that in a bit. This grant, we'll have to see whether that tells us to go in income or in finance buy. So then at the bottom then, investment interest due, depreciation of equipment, wages due. So that's something to note. Normally there's not wages due at the bottom. A dishonoured check and what we do with that. So it's a couple of different ways to deal with that, and then the club has decided that life memberships be credited to income. That's life membership written off. So I just think the only thing we really need to have a little think about is what about that equipment grant. So I think we said the last day that if there's a grant for equipment, it goes in finance buy unless it tells you otherwise. We're going to follow that rule. Okay. So back up then to see anything else that will go into the accumulated fund. So obviously our bank balance, it's on the credit side. So we're going to put that bank balance of 6.3 on the credit. Anything else in here? We've got our loan and our loan interest due. We'll have to do that working. So again, it doesn't tell us how much the loan is, so it's a bit like the working the last day. We'll have to work it out. So the loan, we can say, is 100%. The loan interest is the interest is 8% per annum, and it's for 15 months. So 15 months is 12 plus 3, a year and a quarter. So a quarter of 8 is 2, so that's going to be 10%. So in total we have 110%. So 110% equals 27,500. And we have to work out what the loan is. So the loan then is going to be 27,500 divided by 110 and multiplied by 100. So working back up, we get 25,000. again, if you weren't sure what to do, you'd probably guess that it's 25,000. So the difference then is the 2,500 interest. Okay, so that 25,000 goes in the loan, and then we'll have to work out the loan interest due. So the loan interest now is 2,500, and that is for 15 months. Okay, so we paid it back. So this year's is we paid it back on the 31st of the 10th, so it's 10 months. So that's our expense. So 5 months is our due at the start of the year. So take that 2,500, divide by 5, and multiply by 100. Sorry, and divide by 15, and multiply by 5, which doesn't seem right, but anyway, it's a mock, so we'll take it that it is 833. We'll just go 833. I'm not using decimal places. So 2,500 divided by 15 and multiplied by 10 is 1667. So the 833 is our loan interest due, and then your expense is 1667. Okay, the last couple of things to put in, we'll get our levy due from this year, which is the 2016 50 at 15 members. Is €750, and then I'm going to work out my investments. So my investment working. So my investment income is the interest from 4% investments is 3,300. All right, so the 3,300 is the interest on the 4% investments. We've got a due at the start of the year, which we'll take away. Same as we always take away dues at the start of the year of 200. And then we're going to add the due at the end of the year. So the investment interest due at the end of the year was 1,000. So that gives you investment interest for the year of 4,100. So it'd be a good idea to put that 4,100 in now into your income and expenditure as well. Which is it, 4,100? Yeah, sorry, that was 3,000. So that's 3,800. Okay, so I'm going to take that 3,800 and I'm going to put it in because that could be one you could easily forget about. So the 3,800 is equal to what's the percentage again? In 4%. So 4% equals 3,800. So the investments then are 100%. So 3,800 divided by 4 multiplied by 100. So 95,000. So I'm going to put my investments of 95,000 in to my assets. Okay, and that's our accumulated fund done. So we'll add up our assets and we get 875,405. We'll add up our liabilities and we get 150,433, which we'll take away to get 724,972 as our accumulated fund. Of course, remember to label it accumulated fund on the 1st of the 1st, and then straight away I'm going to put that in my balance sheet. And the accumulated fund is 724,972. Let's check that. Yeah, 724,972. Okay, so when I've that done, I'm going to do my bar trading account next. So fairly straightforward on the bar trading account, I hope. We're looking at our bar sales first. So Our bar sales are our bar receipts, and they're 66.2. From that, we're going to take away our debtors at the start of the year. So we're going to take away the bar debtors of 455, and then we'll add on our bar debtors at the end of the year of 320. And that's 66,200. Is that right? 66.2 minus 455. Yeah, 66. Sorry, 66,065. So the cost of sales opening stock is 6,000. Purchases, same process except with creditors this time. So you've got your bar purchases of 22.5. You're going to take away your creditors at the start of the year of 4.5 and add on your creditors at the end of the year of 5.1. Of course, there's probably no room here, so I'll just move these over. So that'll be 23,100. And then we're going to take away the closing stock, and there's bar closing stock of 17.6. Which we'll then take away to get our bar profit. So 54,565. Now, just as I was doing that, I noticed that there's a catering stock of 450. Remember, catering stock gets taken away from catering purchases before we work out our catering profit. I'll just do that now. So your catering profit is your sales. Your catering receipts of 7.2 minus your catering purchases 3.550, but then you have to take away your stock away from that, and the catering stock was 450. Just want you to be aware of that. So that's 4,100 for the catering profit. Okay, so we can go back up to the top now, and we'll do we'll work our way down from the top. So clubhouse and course 750. As a general rule, the clubhouse and course doesn't change, so you can assume it's going to stay the same. They're not building an extension or anything like that now. There's no reason why they couldn't, so always check. So quick check, nothing on the clubhouse and course there. Of course, it will be something you'd pick up when you read through it at the start. So 750, and then we'll find what the depreciation rate is. So depreciation on clubhouse 2%, so that's 15,000. And of course, that's an expense. Depreciation of clubhouse is an expense. All right. So that's our clubhouse done. Now we've equipment. Now equipment will change. So the equipment started off at 23,000, but you sold equipment costing 3.6, so we have to take that away. And then we bought equipment costing 17,000, so we have to add that on. So that's 36.4. Now, does it tell us about equipment? Yeah, it doesn't tell us the dates or anything that's happened on. So we can just work out, we can all just assume that the equipment was sold on the first day of the year and was bought on the first day of the year. And then the depreciation of it will just be 20%. So the depreciation will be 7,280, which we'll take away. If it gave you the dates, of course, you'd work out what it is around the dates. 7,280 is really an expense first before it goes in the balance sheet. So that's that one done. Bar stock we've done, bar debtors we've done, and bar creditors we've done. So life membership okay, is your finance by. It follows the same process, right? So your life membership started off at 50,000, and then down in the workings, in the subs working at the bottom, it'll tell us something about life membership. So it'll tell us there's 3 new life members, bring the total to 13. That means we must have 10 so far. So if life members started at 50, well, they must have been 5,000 each. So 50,000 divided by 10 will be 5. So 5 by 3 is 15. So your life membership will go up to 65,000. So life membership 65,000 being written off over 10 years will be 6.5. It's written off over 10 years, isn't it? Yeah, so 6.5 gets taken away. Now, you don't really need to do that in the balance sheet. You just really need to put in that 58,500. Okay, so I was only putting it in just to show you. Okay, so that's our life membership done. Levy reserve fund is next. Of course, that is financed by as well, and it's the 6.5 which I managed to forget to put into income goes into income. So sorry, just on the life membership written off. $6.5 goes into your income. So the levy reserve fund started off as 60,000. It's normally just doubled, and you can't say that for certain. But we go down and check in the working on the subs, and we see 50 by 600 members is another 30,000. So it's not doubled this time. So that's why we check. So it goes up to 90,000 now. All right. So that's that done. Wages due. Right. So wages due is, unless it's to do with coaching, or it says it like it did in the 2019 one. Wages goes in with sundry. Now you'll see in this we take away wages due at the start of the year, but because we read through it quickly at the start, we saw that there was wages due at the end of the year, 2850. So we're going to add on the due at the end of the year. So sundry is 116,500. We're going to take out the 25 and add on the 2850. And that's 116,850. Okay, so that's our wages one done. Subs received in advance. That's sort of our last big working. So we start off with the subs figure of 103. Subs received in advance have to get added. So prepaid on the 1st of the 1st. They are for this year, so they get added on. So the subs prepaid get added on. Then we take away everything at the bottom because it's either not subs or it's not to do with this year. So the 3 life members, they're life members, they're not subs. So the 15,000 gets taken away. The subs for next year, they get taken away because they are subs, but they're for next year. The levies then, so the 30,000, that gets taken away. And the levy of 50, the levy from last year, which was 50 by 15, which is minus 750, that gets taken away. Now, we can ignore, you can't really ignore, we'll show it separately at the bottom, but you've got this thing about the dishonoured check of 200 received from a member in respect of subscriptions. Really what that's doing, I'll just show you this here actually, that's bringing this down by 200. So 200 is taken away and you get 102,800. This doesn't change, 1,300. Life memberships doesn't change, 15,000. Subs prepaid, subs for next year doesn't change, so minus 700. Okay. The levy doesn't change of 30,000, and the levy of 15 members doesn't change of 750. But then you've got a subs due. So if the check bounced, there's a subs due of 200. So it's not saying it's been written off or anything. So you'll still get the same number, 57,850, but you will have a subs due. And really, that's the thing we have to be aware of. That this bank figure is 200 too much. So that's got to go to 33,050 because we're taking 200 away from the 103,000. So this will go down to 33,050, and then you will have a subs due. So we might even just put in that bank figure now while it's fresh in my head. So bank is a current asset and it's 33,050, and then I'm going to put in that subs due of 200 now, okay, because that's something we'll probably, you could easily forget about. All right, so that's that done. Now sometimes it'll tell you the debt has been written off, and if it's written off, it's not due. So instead of going there, subs due will go in as a bad debt in the expenditure. So if it says that the debt is written off or it's not going to be paid, it goes in as bad debt. And again, then the subs due wouldn't exist here, so this will come down by €200. So that's maybe something just to be aware of. So that's our subs done. Investment interest we've done. So subs done, catering I did earlier. Interest, so I should have investment interest in. Bar receipts I've done. Entrance fees, they're an income. So they are €8,000. Annual sponsorship, that is 12,600. Equipment grant. Now the equipment grant is going in finance by unless it tells you otherwise, because grants are finance by. That's the reality of what they are, unless you're told otherwise. Competition receipts. See if there's competition prizes. There is, so we'll put in a competition profit. And that's going to be 22,700 minus the prizes of 13,600. Which is 9,100. And the sale of equipment. Now, you don't do anything with 3,000, we've already done the 3,600, we've taken it away. But you don't do anything with this 2,500, but you do say, you have to assume that there's no depreciation because it's never mentioned depreciation on it. So you have to assume that the value of the thing is 3,600. So if you only got 2,500 for something that's 3,600, you made a loss on the sale of it of 1,100. All right. The balance of bank doesn't win. Bar purchases we've done, catering we've done, equipment we've done, sundry we've done, competition prizes we've done the interest, and we've done the balance at bank. So we seem to have done, I think we've done all of them. So we can finish this out. Of course, just be careful. There could be something I've left out. Nearly definitely something I've left out. Sure, I've never put in the subs answer. With all my talking of subs, subs is obviously an income. So 57,850. So I'm going to add them up provisionally, and hopefully this will all balance at the end. 156,515. Expenditures are 141,897, and I'll take them away from each other, and that'll give me my my profit. Of course, we don't have profits; we've excess incomes in clubs. So 14,618. So I can come down to the bottom and get out all my current assets and current liabilities in. So we've got our stocks, and just to save space, I'm going to put them together. 17,600 plus 450. It's 18,050. Investment interest due, I need to put that in as an asset. So everything from the bottom is going in assets and liabilities. Nearly all current assets and current liabilities, except for the depreciations, right? So number 3 and 4 we've done. So debtors, that's an asset, so that's 320. And creditors is a liability. 5-1. Wages due is a liability. 2850. And then we've got our life memberships in. We've got our subs for next year, so subs prepaid. That's a liability of 700. My 2 levies are already in. The closing stock figure, well, I've taken the 200 away from bank and I've added it to subs due. So that's that done. And the last one is in, the written off. Now I already know I've left something out. Okay, I know I've left out my investments. You've got investments at the start of the year, you've got investments at the end of the year. So my investments were 95,000. So unless it tells you you've sold the investments, you have to remember to put them into your balance sheet. So they add up to 859,120. We'll add up our current assets, 52,620. Add up your current liabilities, 6,850. So take them away. Then add on your answer. That's 903,090, and then hopefully this adds up to the same. Otherwise I'll have to go looking around for mistakes. 903,090, very good. So that's our capital employed. And that's worked out. So just our questions at the bottom. We'll start doing these. Doing these now. So it's a show the club's accumulated. Explain what's meant by a special purpose profit and loss account, and use an example to explain what's meant. Well, basically a bar trading account is a special purpose profit and loss account. So it's sometimes, non-profit making organizations such as clubs sometimes have profit making activities such as shops or bars. And special purpose profit and loss accounts show the expenses and earnings associated with the earnings, and profits or losses, I suppose, associated with these, and the profits are then transferred into the main account. Okay, so that's what e.g. bar trading accounts. So that's what special purpose profit and loss accounts are. You could use the examples of, no, that's the best example, I suppose. The club is considering course improvements at a cost of 100,000. What would you advise them to do? Well, they can afford them. So we know they can afford them because they've got loads of money in the bank. So 33,050 in the bank, and they've got investments of 95,000 euros. So That's the first thing. We can say that. So they have investments, saleable investments of it's 95,000, and they also have 33,050 in the bank. No loan will be required. But if they wanted a loan, they could take out a loan if needed. So improvements, just put in a couple of general lines then. Improvements could encourage new members to join, which would increase subscriptions. And our profit, most likely. So anything like that will be enough. Okay, so you're saying the benefits. You're saying they can afford it. You're saying they don't have to take out a loan, but they could take out a loan if necessary, and they're in a position to do it. Okay, so I'm telling the treasurer to go ahead, but basically that'll get us the full marks. Okay, so that's our club account. So apologies, it's a day late there, but we'll see you all in class tomorrow.